Hey everyone, Couch Investor back to another video for today. So SoFi just reported their earnings report. It was a small miss when it comes to EPS. They reported 2 cents. Expectations were 4 cents if you remember yesterday's video. But okay, all in all, good report. They even gave us guidance for fiscal year 2024. Very interesting expectations. Currently the stock is up, as you can see, 11.42% pre-market. Now, for fiscal year 2024, as you can also see here on the screen, we've talked about yesterday, for fiscal year 2024, the EPS expectations are 9 cents. Remember that number. It's going to be important when we look at the guidance. So let's start off with a couple of comments here. We delivered another quarter of record financial results and generated our 11th consecutive quarter of record adjusted net revenue of $594 million. So new member adds of nearly 585,000, a growth of 44%, for total period end members of over 7.5 million, with new product adds of nearly 695,000 and growth of 41% to over 11 million total products at period end. Record revenue at the company level was driven by record revenue across all three of our business segments, with revenue contribution of 40% of adjusted net revenue generated by our non-lending segments, which is technology platform and financial services segment, which are the ones that will grow quite fast in 2024. On a consolidated level, we saw sequential and year-over-year expansion of our net interest margin to just over 6%. We also generated record adjusted EBITDA of $181 million, representing 159% year-over-year growth and 74% incremental adjusted EBITDA margin, with all three segments profitable on a contribution basis. This equates to a 30% adjusted EBITDA margin in line with our long-term target. We generated positive GAAP net income of $48 million in a quarter and EPS of 2 cents. Finally, we generated $204 million in tangible book value growth in the quarter and $334 million for all of 2023. Now, with regards to total deposit, that number is still at $2.9 billion for this quarter, same as last one, up 19% during the fourth quarter to $18.6 billion at year end, and over 90% of SoFi Money deposits, inclusive of checkings and savings and cash management accounts, are from direct deposit members. Last thing here with regards to SoFi Bank, generated $128.6 million of GAAP net income at a 27% margin in the quarter and an annualized return on tangible equity of 16.8%, which, as you can see here, this is from last quarter, quite a nice improvement. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe. If not, we really appreciate that. We're going to cover a lot of companies, especially this week, huge earnings week across the board. So hit that thumbs up button, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, with regards to members, as you can see, it's been one hell of a graph to look at, up and to the right. Yes, growth rates were down a little bit from 47% year-over-year growth to now 44% year-over-year growth, but still quite remarkable. The same can be said here with products, and if we look at Galileo accounts, we are continuing the uptrend. Remember, last year we saw a little slowdown here. We're at 131 million accounts, then 126, went back up 129, then 137. Now we're at 145. It's up 11% year over year. And with regards to that segment specifically, so the technology platform segment record net revenue of $96.9 million for the fourth quarter of 2023 and $352.3 million for the full year. That increased 13% and 12% respectively, and 8% sequentially. And contribution profit was $30.6 million for the fourth quarter and $94.8 million for the full year, increased 81% and 24% from the same periods last year, for a margin of 32% and 27% respectively. Now, they say here that in the fourth quarter, growth was driven by continued strong organic growth of existing partners, new product adoptions, and notable contribution from increasingly diversified clients which have launched within the last 6 months. As noted previously, we continue to make significant strides in our strategy of leveraging our unique product suite to pursue diversified growth and larger, more durable revenue opportunities. 2024, in my opinion, is going to be quite a big year for the technology platform segment. And they again here reiterate what we saw last quarter. There is a robust pipeline of ongoing discussions with potential partners with large existing customer bases across both the US and Latin America, spanning both the financial services and non-financial services segment. Remains to be seen what will happen with that this year and onwards. Moving back to the slides here, so lending and financial services products. Lending increased 24% year over year to 1.6 million. Financial services one increased 45% year over year to 9.4 million. Again, this segment continues to outpace the other one. And so Q4 really looked like a great quarter with regards to revenue growth year over year, 34% year over year growth, big increase there compared to Q3, which was 27% year over year growth. But then look at quarterly adjusted EBITDA. We were at 98 million for Q3 with an EBITDA margin of 18%. We're now at 30% with $181 million. Quite remarkable. And so overall, the results for fiscal year 2023 non-GAAP results versus their own guidance. Adjusted net revenue came in at $2.074 billion compared to the guidance. It's a beat of 1% or 0.4%. With regards to adjusted EBITDA, $432 million with an adjusted EBITDA margin of 21% compared to a margin of 19%, and the difference here in adjusted EBITDA, $36 million, low and high end. Now, with regards to guidance, they expect to deliver $550 to $560 million in adjusted net revenue and $110 to $120 million in adjusted EBITDA, and this is something we'll get used to, $10 to $20 million in GAAP net income. So the net revenue growth between 20 to 22% year over year with an adjusted EBITDA margin of between 20 to 21%. And as for the full year guidance, they expect to deliver a couple of things here. One, tech platform and financial services growth of 50% or more versus 2023 levels. Lending segments at 92 to 95% of 2022 revenue levels. GAAP net income of $95 to $105 million. So we're going to see some acceleration of GAAP net income. Adjusted EBITDA of $580 to $590 million. There was a JP Morgan note that came out, I think, during the weekend, and they lowered their estimates. I think they lowered it because, well, it's pretty close to the number SoFi has given us right now. An EPS of between 7 to 8 cents. So we've talked about the estimates for EPS this year, right? Yesterday we said for this quarter the estimates are 4 cents. Now whether or not they would have delivered that, yesterday we didn't know. So we speculated a little bit. If it would have been 1 cent, then I think 7, 8, 9 cents for the year would have been pretty respectable. Even 2 cents would have been pretty respectable. But if for the quarter they came in at 4 cents and guidance for the year would have been what we've gotten right now, 8, 9 cents or so, then maybe the market wouldn't have been that, let's say, enthusiastic, in my opinion. But right now, we've gotten 2 cents. They expect it to remain 2 cents or so throughout the year, or maybe one quarter is going to be less, the other one a bit more. So we're getting EPS right now 7 cents to 8 cents. Of course, they can revise guidance throughout the year, raise or lower it, remains to be seen. Usually, we're used to seeing guidance raised. The last thing here, $300 to $500 million of tangible book value growth. And this guidance assumes expenses under the EBITDA line to remain flat at 50-50 revenue split between lending and the combined tech platform and financial services segment, as well as adjusted EBITDA margin ramping to 30% by year end. And so right now, we are going to open what it seems like over the 20, the 50, and the 200-day moving average at $8.39, which if you look back here, June, July of 2023, we were around that price for a month or so. It would be nice to start forming a new base to actually stabilize the stock for once and then continue from there. But overall, again, I'm very happy with this report. I'm going to do a separate video with regards to what gets mentioned into the earnings score, so stay tuned for that. Of course, Do share your thoughts down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.